want to take a look now at the larger world of mergers and acquisitions in 2010. After a low point for financial services deals in 2009, what will happen this year and what other sectors will see the most activity? With me now, Eric Weber, Managing Director and Chief Operating Officer at Freeman Co. They are an M&A advisory and consulting firm for financial services companies. And Frank Aquila, a partner at Sullivan Cromwell. He has done work for clients like Anheuser-Busch, InBev, and Diageo. Eric Weber and Frank Aquila, welcome, gentlemen. Great to have you on the show today.
Thank you.
So let's begin with this theme of financial services M&A heating up. Hardly anything happened last year, right, Eric? So why is that turning around now?
Well, you're finally having some of the indigestion in the system work out. We've had a little bit of stability in terms of the markets. Financing is becoming a bit more available, and people finally have some level of confidence in projections in 2010.
So within the financial services industry, let's break it down a little bit and talk to me, in particular, let's start with the exchange industry. We saw a round, right, of consolidation about 2 or 3 years ago or so.
Correct.
And you're saying that's going to come back into vogue?
Well, you've had most of the large deals done in that sector. What you have is leapfrog technology issues where there's always some entrepreneurial cutting-edge new execution system that, quite frankly, the New York Stock Exchange, NASDAQ, need to keep up with. And what you tend to see is the larger platforms making more middle market acquisitions, $200 to maybe $800 million to keep up with the next generation of technology.
Insurance companies, kinds of challenges are we dealing with there that would cause them to want to team up?
Oh, well, they have a lot of balance sheet problems, a lot of impaired assets. They're under a great deal of regulatory pressure. What we're seeing there is divestitures of non-core assets, as well as a wide range of capital raising pursuits from private placements, secondary offerings in the public scope, and we may even see some that require some government intervention.
Frank, so how important is deal flow, specifically in the financial services industry, to the overall picture for M&A in 2010? How much will it make up?
Well, clearly, the fact that financial services are improving and potentially consolidating, I think is good generally for the market, and particularly the M&A markets. It's hard to say at this point what percentage financial services are going to be of the overall M&A market. I would say, it could be anywhere between 15 and 35% of the overall M&A business, and it really depends on what level of consolidation you're going to have happen. To a certain extent, the last 2 years have been focused on the financial services sector, but really from some of the problems that they've been having. Now that they're becoming healthier, they're going to consolidate, and I think they're going to help consolidation across other sectors as well.
There's all this talk, financial regulatory reform, right, coming out of Washington. They're talking about bringing back Glass-Steagall. I have to imagine that would create additional opportunity for M&A. Do you agree? Or is it too early to tell?
Look, any regulatory change probably creates opportunities for M&A. The real question is the breakage, is the damage from that sort of regulatory change worth it? From my standpoint, I think M&A should happen when you're going to have positive effects on the overall market and the overall economy. Having changes like that, I don't think really achieve their goal.
And Eric, you're talking about the easier time a lot of the big companies are having getting access to credit. Private equity firms in particular are enjoying that. So that combined with the fading bailout, we're talking about, how the government has been stepping in, obviously, since the crisis. This has to be a great time for PE. Do you expect, what are your forecasts for the new year?
Well, 2009 was very bad. They did not get a lot of deals done. Many strategic sellers thought that they wouldn't get best pricing from private equity and that they weren't able to access the financing market. You're seeing the debt markets becoming much healthier. So we're expecting an uptick in that activity, particularly, as Frank indicated, any kind of regulatory change often causes a reshuffling of business units, and any type of pressure, transitory pressure like that, I think creates opportunity for those investors.
So Frank, as a lawyer, how would you be advising these financial services deals? What hurdles might you anticipate?
Well, I think, Lori, one of the things that companies in any sector, particularly financial services, have to look at not only what the regulatory environment is today, but what it's likely to be in the next year or two. I think one of the complications is that financial services reform, financial services regulation, is multinational today. So banks and financial institutions have to think about, not only what the environment is going to be here in the U.S., but what it's likely to be in the other markets in which they operate. And I think that's a clear impediment to people making decisions at the moment, not knowing what that might be.
Gentlemen, a quick interruption, because as we've been expecting, Google has finally announced the Nexus One, Google's version of the smartphone. I know, everyone's stopping and cheering. This was such a surprise, right? We'd actually, again, as I mentioned, been anticipating this. Our reporter, Chris Valera, is there in Mountain View, California. We'll check back in with her if we can shortly to get more detail on what this phone will involve, what sort of whistles and bells it will have, and what it means for the competitive landscape, of course, for the smartphone industry. Now, let me think, how do I segue back to M&A? Do you see any deal flow in technology? How's that industry looking?
Definitely. High tech is an area that we're going to see a fair degree of consolidation. To a certain extent, one of the things that happened in 2007, 2008, as companies cut, one of the budgets that did get cut was their IT budget. They're starting to spend now. So the survivors in the tech sector are going to use this as an opportunity to really consolidate their position and become stronger.
The headline deal in progress today, obviously the latest with Kraft. Let me just update on the news. Kraft is bidding for Cadbury, of course. Kraft raised its cash offer, but Berkshire Hathaway, the top stockholder in Kraft, voted against the proposal to issue shares to help buy the company. How's this one going to sort out? I know that's not your industry, Eric, but if you have a comment on it, we'd appreciate it.
I think I'd defer to Frank on that one.
Yeah, I mean, you really need a play sheet. I mean, you woke up this morning and you think one thing's happening, and then you hear the next announcement. To a certain extent, it's a bit of M&A soap opera. I think the true story there is that when you're involved in an unsolicited bid, you just really don't know what's going to happen. And I think that's one of the reasons why, until an unsolicited bid is actually signed up, you really can't determine which side is going to prevail. I think the same is true in that situation.
Bottom line, we're expecting M&A certainly to heat up in the new year with financial and economic conditions improving or seeming to do so. Gentlemen, thank you so much.
Good to see you, Laurie.
Eric Weber, Freeman & Company, and Frank Aquila of Sullivan & Cromwell, our guests.